Hey guys, welcome to Market Monthly. Today we're going to go into everything that's happened in the last month with inflation, with the government, and something called a potential silent depression. So I'm going to get right into it. Before we do that, we'll do a quick dad joke for you guys. So what do you call a hesitant potato? A hesitant potato. A hesitator. A hesitator. Anyway, so getting right into it. So right now, one of the things that we have to note about is like how inflation is trending right now. So this is a chart of one of the inflation reports called the Consumer Price Index. Now, Consumer Price Index is just one of three inflation reports that, on a nationwide basis, we monitor. The other two are Producer Consumer Index and Producer Price Index. Now, all these three inflation reports all trend about the same. They just measure certain things, certain prices, and all that stuff. But keep in mind, inflation, when these reports come out, they are a lagging factor. So which means a lot of this data is from a month ago to give the report for this month. So it's just really just kind of get an idea of what has been happening, not so much what is planning to happen. Now, what's nice about knowing what has inflation done in the last year is that, in the peak we saw 8, 9, one of the other inflation reports even got to as high as potentially 10, or pretty close to 10. Now we're looking at where inflation is pretty much been more than cut in half, which is a really good sign. Essentially, this is the efforts of the federal funds rate being raised back in March of 2022. Now, they've raised them a couple of times, and this is the expected impact of the Fed rates going up and for inflation to come down. Now, the idea is that with inflation coming down, mortgage rates are expected to follow. Now, when do they start following? They did see some signs throughout the year, but right now it's been really, really tough to see. One of the things that has been keeping rates up as high as they have been is the strength of the economy, or from what we've been seeing from the strength of the economy. So it's really hard to say. So with that in mind, how has it been impacting rates? Well, to give you guys an idea, over the last, let's say, 12 months, right, we saw inflation and mortgage rates pretty much peak up around this point, and we figured that was the worst of it, right? And over the next couple of months, there were some reliefs for a little bit. Well, unfortunately, from basically February of 2023, rates have been on a slow positive trend, going ups and downs, and now we're at another peak again, and kind of peaking higher than where we were at the end of last year. So what's really going on? Well, most of the things that are happening is because of what's coming out with reports of the strength of the economy. The main thing that's been saying that we're a strong economy is mostly jobs reports. A lot of jobs reports are coming out saying that the strength of the economy is strong, people are getting jobs, more job creations and things like that. But in all reality, what's funny is that a lot of these job reports get revised about a month to 2 months later to find out there weren't actually that many jobs created. So that's another thing that's kind of been tough. One of the things that has been impacted more inflation, which ultimately impacts mortgage rates, is shelter costs. Shelter costs kind of peaked out about 6 to 7 months ago, and then finally has started to come down, which has a huge weighted average on inflation rate. So what is really happening with mortgage rates? We still expect mortgage rates to come down in 2024 because of the upcoming recession, which might actually transform into what's called a silent depression instead. So we're going to go into a little bit about that later, but one of the things that we also want to talk about is home prices. What's tough about home prices is that they have not really gone down. For the most part, they kind of plateaued a little bit, but we're looking at something called the Case-Shiller Home Price Index, and this is for just this last summer, for July, the report for July. And home prices are still going up, even with rates being as high as they are. So now think about this. We're in a situation where home prices haven't really gone down at all. They might have plateaued for a little bit. They might have been reduced a little bit, but really, it just really slowed down appreciation, which means there's still appreciation, just not as much. So we have home prices still going up. We have rates that are still relatively higher than normal. And we have inflation has been as high as it has, with wages, income wages haven't really adjusted with the increased home prices, right? And living expenses and all that. So you kind of think of all this like perfect swarm of things that are happening to the economy that are not good for the people who are wanting to buy a house or even want to afford rent, because rent has gone up quite a bit over the last year. So what we're seeing here is that the quarterly average in the last quarter, like we're seeing that we are on average we're still seeing 1.6%. You don't see any states that are any negative anymore. They're still pretty positive, and that's also due to the season. Most times, home prices do go up during the summer because more homes are being placed on the market. More people are more open to buying during that market, and that's why home prices are still relatively positive. Not by much, but they are positive, and that's kind of a good thing for now. Now, one of the things I want to get into is something called the silent depression. So, I've been kind of reading. I've been kind of following some, I guess, financial influencers in a sense. Um, Probably not the best people to really follow on this advice, but there was one thing that really came out that kind of struck a chord that we might be going into a silent depression because all those factors we talked about. So we have high interest rates, inflation still relatively higher than it should be. We have wages that haven't adjusted to the higher cost of living for buying a house or even for rent. Rent has all gone up quite a bit, and home prices haven't seen that. So all the bad things that are happening financially for people right now is happening right now, and that's what's causing people to have this and go into the silent depression. Now, one of the things that the jobs report doesn't really show is that going into this year, a lot of these people who are losing their jobs are going into temporary jobs or gig works. So it's not like they're going to a corporate job or going into like the federal government, things like that. They're losing their jobs from those situations and going into temp and gig work. I've been seeing it with a few of my clients who have been in those situations where they're doing temporary work just to have a job. So that's what's kind of really tough about what's going on with the current economy is that despite what the reports say, and a lot of the reports are at least a month or 2 months old, it's not showing the reality of what's actually happening with the economy, which is what they're coining right now as potential what's called the silent depression. So keep that in mind. At this point, how do you prepare for a silent depression? Save. At this point, cash is king. Cash is going to last you as long as you can. Try to reduce your debts as best as you can. That way, you can go into this year and be prepared of what's going to be a big change in the economy. So if you have money invested or stocks, it might be a good time to just sell these things and just sit tight on keep the cash when it's ready to have that buying intent. So it's something to consider, especially if you're depending on your job too. Job security, depending on how long you've been at the job, is higher and higher. When you've been at the job for a while, you've had a lot of experience in education. Those who have been at jobs, at their current company for a shorter amount of time, have a little bit more risk. So it's something to consider as we're going into this economy in this new wave. Because another thing to note is that we're just now recovering from a recession, and now we're about to go into another recession or silent depression. So these are all things that are going to have a huge impact on the economy. And it sucks. It would be terrible to know that you guys aren't prepared for the situation. So hopefully you guys are doing something to help with your finances so you can last throughout at least the next year. So something to consider. Hopefully this helps. Hopefully you guys will get out of this. But keep a lookout for this term called silent depression because it may come up again. Anyway, that's all I got for you guys. Hope you guys have a good week and great month.